Home ownership. It's the middle-class dream, a symbol of responsibility, independence, reaching adulthood. You get to put your hard-earned savings into an investment. You get to make it a cozy home and have a space to grow your family. And ultimately, it's a way to build wealth. But wait a minute, what is going on here?
The virtual real estate market is on fire right now.
Virtual land that had just sold for a record-breaking $2.4 million.
Do you own any digital real estate? What?
Once you own the land, it fully belongs to you and you can choose to do whatever you want with it.
Land inside Decentraland is a non-fungible digital asset, an NFT.
And that's why I went ahead and I purchased a metaverse property.
Here is everything you need to know. Let's go.
I do want to mention a disclaimer that this is not financial advice.
We've invested across 19 different metaverse platforms already. We're tracking over 180 different metaverse platforms and new ones are being announced every week.
Adidas buying land. They are thinking about creating their Adiverse.
Just in case millennials weren't tired of being outbid for real-life houses this year, now you can get priced out of digital land as well.
In November of 2021, a plot of land in the virtual world, The Sandbox, sold for $4.3 million, making it the most expensive metaverse property sale to date. Investors in The Sandbox have been quite active lately. The Sandbox was in the top 10 in total trading volume across NFT collections on the OpenSea marketplace, and it takes the top spot across virtual world collections. Don't have millions of dollars to spare? Not to worry. You could just snatch an individual piece of land for just $10,000 to $15,000. So why, oh why, is this happening? Well, first, there's the rise of crypto.
People think that Bitcoin is digital gold, which it's not. This fool's gold instead.
I could care less what Bitcoin trades for, how it trades, why it trades, who trades it. If you're stupid enough to buy it, you'll pay the price for it one day.
Bitcoin crossing over $60,000 last week.
ProShares will be the first out with a Bitcoin futures ETF.
There's a good chance that crypto is the future currency of Earth.
Overnight, he's been tweeting, and it is driving up Dogecoin pretty significantly. It's up by 72%.
And I just became a millionaire right now.
Tesla has jumped in with both feet. And Microsoft accepts it for software now. Etsy accepts it now, and so does PayPal and Starbucks and Whole Foods and Home Depot. 1 in 10 Americans use their stimulus checks.
Coinbase is set to come to the public markets in a direct listing.
With crypto going mainstream and the rise of consumer investing, we're seeing the discourse shift from what the blockchain is to what blockchains can be used for.
Web3, some expect some tension between Silicon Valley companies like Meta and some of the more native crypto startups, which are trying to build decentralized versions of those social networks and their own metaverse.
Users don't just explore these worlds, but they can also own goods and property, and it's been getting a lot of buzz. Facebook rebranded itself to be called Meta, and venture capitalists are jumping in too. With more and more people in the tech world working on blockchains and metaverses, the space appears ripe with investment potential.
Every single corporation on the planet will need a metaverse strategy.
There are now many metaverse worlds, with new ones popping up every week. Some are modeled after the real world, but others, like The Sandbox, focus more on simple graphics and gaming experiences. The gaming industry has proven to be one of the most profitable and long-lasting entertainment categories, and this is no different in the new virtual worlds. Like Roblox, The Sandbox is betting that making it easy for users to build their own games will lead to more content and attract crowds. And if users actually have property rights to own their land and assets and potentially profit, they will have even more incentive to invest their efforts. Gaming is just the start. There could be a wide variety of meaningful user experiences in the future, including community building, social activities, or forming personal identities. And where people congregate, businesses will thrive as well. Similar to real estate in the real world, people can develop the properties and earn passive income. For instance, they can deck it out and rent it out, or hold on to the land as an investment and wait for it to appreciate and maybe flip it. Or even to hang on to it for personal use as one's own pad in a thriving online community to show off NFTs, invite friends over to hang out, or use it as a meeting room.
a building, a casino, a store on your parcel. You can generate revenue, you can charge rent, you can sell space for advertising, you can build a museum.
People buying virtual real estate today see the potential uses, and they believe the upsides are significant. And they're trying to get first mover advantage too, similar to early investors in companies like Facebook or real estate investors who bought pieces of Manhattan in the 1800s. Now, a reasonable question is, how much should the land be worth? And that, my friends, is where we can look to Economics 101.
There's only one thing you should learn in economics, it's supply and demand.
The more the demand for something, the higher the price moves. And the more limited the supply, then we've got people fighting to own something scarce. And that drives prices up as well.
I get 20 messages a day from all the big guys. Justin Bieber contacted me, wanted them. Gary Vee, they all want my cards.
That's why the most popular metaverse worlds have a limited supply of land. Another factor in real estate is location, location, location. Think about it. What makes New York City so valuable is that it's the epicenter of finance, or at least it was. What makes San Francisco valuable is it's the epicenter of tech, or at least it was. And what makes Los Angeles valuable is it's the epicenter of Hollywood, or you know where I'm going with this. These cities used to have quite the monopoly over these industries, but that's starting to shift. And it used to be that if you wanted to work in these industries, you needed to live there. And now with more and more moving virtual, the idea of physical proximity becomes a luxury, not a necessity. And in the future, we might see that it's not about your physical location, but your virtual one. And so location matters in the metaverse too. Property is going to be worth more if you're located downtown, or you happen to be Snoop Dogg's neighbor. But also, which metaverse world matters too. Which place will attract the most visitors or be perceived to be the cool or luxury worlds to be in? That's what separates the Westfields from the sprawling strip malls. That's why the Sandbox team hopes to attract content creators by providing easy tools for game development, hosting competitions, and setting up a creator fund. The hope is that if they can attract the creators to build the world quickly, then users will soon follow. Another factor that drives location attractiveness is the local government.
And we have a significant runway for growth, which I think is missing in some cities in America.
In the metaverse, you're betting on the team behind the project. One thing metaverse teams will do is release a roadmap to share future plans and instill confidence that their project means serious business. So what's on the Sandbox's future roadmap? For one, they plan to set up a governance structure for property owners to vote. They want to make the world accessible on game consoles and mobile devices. They also hope to have over 5,000 games by 2023, and they plan to cultivate more brand partnerships. This is on top of the over 60 partnerships the Sandbox already has. You know that Deadmau5 knows how to get the crowds going, and Snoop Dogg knows how to throw a party. And Atari, they're gonna bring their classic games. And Adidas knows how to partner with top athletes and famous apes. So all of these factors go into evaluating the attractiveness of a particular metaverse world. And there's one more consideration about location. Which blockchain is the metaverse on? And how much do you believe in that? While Ethereum is the OG blockchain of metaverse worlds, competitors like Solana that are much faster and cheaper are giving it a run for its money. Or in the case of the Sandbox, sometimes the team will decide to move their metaverse from one chain to another. All of that brings us to the risks of investing in virtual real estate. We don't know which blockchain will thrive, which metaverses will really capture the hearts and wallets of consumers. Maybe none of these have even been built yet. The early rising stars today could wither and easily disappear. Will a piece of land in the Sandbox really be populated in 5 years? Or is its roadmap more fiction than reality? Not to mention, when each metaverse is coded by developers, is there really scarcity? We could soon live with multiple thriving metaverses or multiple interoperable worlds. There's also the risk of limited mass adoption. Even Elon is skeptical. Will the average person want to spend that much time and money in a virtual world?
In order for something to be a viable long-term investment, it must have some type of utility value. And if it doesn't, at best, it's simply a speculative gamble.
So, will investing in virtual real estate today be truly like investing in Manhattan in the 1800s? Or will it turn out to be like the vast ghost cities of China, where billions in capital has poured in to develop property that was ultimately undesirable? We don't know for sure whether these particular investments will turn a profit, but what they do show us is that a whole lot of people are willing to bet that a virtual future is not that far away.